This is the Leadership and Insurance Podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now.
I think the companies that are going to succeed are the ones that are going to understand and master the art of intent.
When we talk about innovation, we lean too heavily to think about technology and we don't think about creating a culture of innovation.
I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless.
Good morning and welcome to the Leadership and Insurance Podcast. I'm your host, Alex Bond, and I'm very lucky to be joined again by a friend of the podcast, Bob Frady, who is now on, I don't know, it's not your second time around. I will get into that. It's more than that. But he's now CEO of Property Lens, joined us previously with the previous business. So, Bob, lovely to have you back. How are you?
I am fantastic. I woke up on the right side of the dirt this morning, so all's downhill from here. It's beautiful.
well, good. I hope you say on the upside of it. Yes, well, you showed your figures there, but just for the people that weren't, it's the third time around as an entrepreneurial venture. Yeah, so glutton for punishment, and definitely something we're going to ask about. But look, before we dive in, talk to us about Property Lens. Who are you? What are you trying to achieve?
After we sold the business, they say don't do anything rash. So of course we bought a house, and I was looking into the house, and I knew some things from being able to dig up data, stuff that wasn't disclosed on by the realtor. And one of them was presence of radon gas. And I said, hey, get a test done, and they did, and it came back elevated. And there's lots and lots and lots of things like that happen when you buy a home. Buying a home is very stressful for a lot of people because sellers don't disclose everything. They're not forced to in most states. So we've developed what we comfortably call a Carfax for homes. It's a property history report for homes that has a timeline of when things have occurred, what's occurred, but also takes a rule set and says, given what's occurred, here's the questions you should be asking. Because you can't just walk in and say, this property has had something happen. You have to ask questions to the realtor to get them to tell you the truth. And so we provide you with both of those things, almost instant access for $99.
Wow.
So yeah, it's something that people ask me why I start business. It's because a lot of stuff bugs the crap out of me. Well, if it bugs other people, then let's see if we can solve it. And this really bugs me. Like, people have way too much stress in buying a house. We're trying to help them sleep a little bit better at night.
Yeah, I think it's rated as it's definitely the top four of kind of stresses in people's lives. Getting married, having children, moving job, and moving house.
Mm-hmm.
And I always remember that because what we do is, I always have to remind the team. I was like, look, people are moving job. It's not just our job. It's the most stressful thing you do. But my experience is limited on having children and getting married, and that's not things I've done. But moving house I've done several times. Incredibly stressful. It definitely feels like an underutilized tech opportunity. Would you feel that? I mean, obviously you're addressing one part of it, but just the whole process feels just antiquated and old and complex, and there's a chasm there for people to drive through. You were on the podcast last with Hazard Hub, and you mentioned about selling it.
Yep.
I remember you basically being the LinkedIn fire hydrant guy for a long time. In fact,
I still love fire hydrants. There's a fire hydrant directly across the street from the house I bought. So I not only look at it, I live it.
And so, I remember it being so infectious. I think I even took a photo and sent it to you once on LinkedIn. And I don't even think I really understood the context because it's not a thing that we have as much. You've been on a journey. You obviously were acquired by Guidewire. I kind of wanted to start there, only because, big context. You've been a previous guest. We were talking about Hazard Hub. You got acquired sometime after that. And then you get acquired by one of these big players. What was that experience like? I'm kind of intrigued about what that experience is like to go through, because a lot of people, that's what they're aiming for, some sort of acquisition and exit.
When you start a business, I had a friend of mine give me some really great advice. He said, you need to start with the end in mind. Do you want this to be a lifestyle business to last for 20 years? Do you want to grow it up and sell it? Do you want to grow it up and keep running it? And so as a management team, the three of us together were like, if somebody offers us this much money for the business, we're going to sell it. And then we changed that and said, if somebody offers us this much business, and then and then one more time, if somebody offers us this much business, this much, then we're going to take it. So anyway, so we knew that we had built a company that we wanted at some point to sell. And then my third co-founder was 77 years old and said, hey, listen, I want to retire and spend time with my grandkids. And I looked for all sorts of ways to buy him out using structured capital. Because we were bootstrapped. We didn't have any investment capital, except for one investor. And so we decided as a team, well, we built this to sell it. This is a really good time to do it. This is where we maximize his take. And we interviewed a bunch of bankers. We interviewed 7 bankers. We picked one. And then we went into a process. And ironically, Guidewire had come to us in December of, I think, we're talking about a partnership. They asked a bunch of questions. And I said, these aren't really partnership questions. I said, these are you for sale questions? And I'm like, well, are you? So they were always very aggressive from the beginning about wanting us to be part of their team. We did go through a process. And then Guidewire said, hey, I want to stop this process so we can negotiate directly. And they did. So we went from in March, selecting our banker, to selling to Guidewire on August 18th of 2021.
Quick process as well for something like that.
Yeah. Well, the funniest part of the due diligence is when companies acquire you, they question all of your revenue and they look at every contract and they go, is this repetitive or is this just a one-time thing? Is this real revenue? Because like we got a PO from Amazon for a couple of $1 million. And I'm like, what's this for? They said, well, just using it. We're just holding it. I'm like, well, I can't report that. What am I supposed to do with this? I can't report it to my board. I can't base the value of the company on that. So we left it out. So anything sketchy, we left out of our financials. So when the financials came, I'm like, you're really, it was all usage based. It was all, if you use it, you pay. If you don't, you don't. Very repetitive, growing. If we did nothing, we would grow 20% a year, plus all the new customers that we had.
Yeah.
So it was really simple financials. And they were, even after they bought us, the first 3 months, they were like, we're just still checking to see if your revenue is real. I'm like, we're not that smart. We're not that complicated. It's like, here's your money, put it over there. And so that was the funniest part of the process, but it's certainly a tough decision because Hazard Hub was growing like crazy. We had the choice to just stay and grow even more. And it was just the right time from a life business standpoint to sell. And since Guidewire purchased it, I think it's grown 5x altogether since the purchase. Wow. So I think it's been a pretty good purchase for them and certainly a good outcome for us.
I'm interested. This is from entrepreneur to entrepreneur, and as I've got, I mentioned actually off recording my birthday today. Bob did wish me a happy birthday. He doesn't need to do it again. I won't get him doing it on recording. But the point is, I was thinking about a number, and my friend, I've had a couple of friends that have exited businesses, and we've talked about numbers, and you start with a number, but my number keeps going down. If you gave me this, I'd leave. And I'm sort of partially joking, but I think I'm intrigued. When you said there was one number, then there was another number. Where did it go? Did it keep going up? Or?
In the first 3 years, would have sold the company, my share of the company, for a lot less than we sold it for because it's so stressful. Building and growing a company is really stressful. But then once you get to the point of knowing that you're going to be able to pay all of your people, and now your next stage is growth, that's when you can start accelerating the value of your business. Once you've proven the market, once you've proven your solution and you're growing, that's when you can get a little more fun. And so, but we made a pro forma at the beginning and we thought that we would be worth X over this much time. And we were right on it. And we were off by a year, unfortunately, but we were right on our projections, except for that whole year thing.
Excellent. I think it's important to share these stories because, we get lots of people on that are entrepreneurial, and it doesn't have to be an exit. Like you say, you can build a business and you can build revenue out of it. And speaking plainly, I work in an industry where the multiples don't make sense to really exit. So it's about growing a business that's for the long term. So we take long-term views on everything. But that mechanism of exit as well meant that you became a Guidewire employee for a long period of time. In fact, I bumped into you to quite a few events when you were representing Guidewire. What's it like going from that small entrepreneurial environment and then being part of this big corporate, or was it a bit null and void because you're really still part of Hazard Hub at the time? Or but yeah, what was that kind of big corporate experience, having been in this really small startup growth phase business?
It's a really good question, because I think a lot of when big companies buy small companies, it's a bit like an old guy dating a young girl. They're trying to capture some energy that they may not have themselves. And it was great the first year because I was so busy running Hazard Hub that I didn't have time to say anything that would get me in trouble. Entrepreneurs by design, or however you put it, are rule breakers. We see something, we don't like it, and we aim to change it or fix it. And big companies are rule followers. Here's a set of rules, follow those rules and don't break them. And that's, you're gonna have a period at which one or the other has to give. Either the entrepreneur has to say, I don't want to be a rule breaker anymore, I'm just going to ride this out, or the organization has to say goodbye to the entrepreneur. And so after a couple of years, I was like, I just want to grow. I want to do things. I get a million ideas, and Guidewire, saw things a bit differently. To their credit, they should see it differently. They're a big, giant company. We're a tiny little speck on that company. I made the choice after 2 years. It's like, I really like the management team. I think that Guidewire everyone else is playing for second place when it comes to policy admin systems because of the work that they're putting into their cloud product. But I was just like, I gotta go. And I had a financial incentive to stay that was rather significant. And some days that makes me cry that I let it go. But the other thing is, you only got so many at-bats in your life. You're only going to live so long. And you want to sit there with golden handcuffs? Sure, I could have done that. But I don't need them. I can go and do my own thing. And that's a luxury that we have. And this problem has been bugging me for years. So I'm like, I'm going to solve it. I'm going to, very peaceful exit. There was nothing untoward about the exit from Guidewire. And I was just like, I got to go do my own thing. So I would say for any big company acquiring a small company, you have to have a plan where, unless that CEO is exceptional at corporate politics, which most aren't, you got to get rid of them within 6 to 12 months. It just doesn't make any sense to keep them. You got to bring your own management team in, learn from them for a year, and then exit the founders. Is probably the best way I've seen acquisitions work.
Yeah, I've never known anyone. It's the two friends that I know, very good friends that have had their exits, both exited in similar ways, bought by bigger companies, integrated, exactly the same. Like, they are rubbing up the wrong way against, with no intention. That's what got them there. And the last question I'll ask on this is that, do you think that's where you sit? Because that's when I think of kind of purebred entrepreneur, 0 to 1 guys. You're one of the people I think of. I'm like, Bob just likes taking an idea, making it happen. And then I don't know if this is virtue of the fact that you had a relatively quick exit from start to finish and getting out of Hazard Hub. That's the impression I get of you. That's almost like where you find the fun. And then actually, there's sort of, even if you kept it yourself and you didn't exit, you might exit yourself and get a CEO. I could see that. I don't know if I'm making an assumption there, but that's how I view you.
Yes, that's a very good it's a very astute observation. Some people are really great at starting things and getting the vision and getting people lined up behind it. Some people are very good at taking that and expanding that vision into something really incredible. And some people are good at just minding the store. I'm way in the first camp. That's where the fun is for me, because in both situations, Hazard Hub and now in Property Lens, I went to the management teams of the companies I was working for and said, hey, this is a cool idea. What do you think? And they both thought it was too far afield from what they did. I'm like, okay, fine, I'll do it myself. And that proving yourself right is a juice that's hard to get in a corporate. And so, yeah, I'm way over there. This time with Property Lens, I kind of want to stay in the seat longer, just to see how big it can get, because I think it can be an order of magnitude bigger than Hazard Hub. But we'll find out. We'll find out.
Yeah.
And I know myself that at a certain point, I'm going to say something stupid and someone's going to want me to just, go be executive chairman. And I'm okay with that.
I'm only at 6 people. I'm already thinking I need that. Well, let's get back to property lens. I think I can see what you mean
Yeah.
about scale, because Hazard Hub was very much, selling to the insurance industry. That was the kind of target market. That's the distribution model. You seem to have different methods of distribution, or different channels to market. So you've got a direct to consumer, people selling their own properties, but you've also got something for realtors, etc. So maybe talk me through the kind of distribution model, and just so we fully understand the way that it works.
The primary, we talk about it in terms of the focus of our marketing efforts, because the product works for the continental United States. Anyone can use it, whether you're a realtor or home purchaser. But the intentionality of our marketing is that we want to talk to the consumer, because if you take a product like this and give it to an agent, they're gonna bury it, because all it's going to do potentially is mess with the value of the sale. And the seller isn't concerned with that. The seller wants to maximize that amount, and their agent wants to maximize that amount, and they want to get the transaction done. They don't want to dwell on the problems. Whereas the buyer, super concerned about that stuff. And so if you win the buyer, then we think the agents and the insurance industry eventually will follow, because consumers will ask. The real estate industry and the insurance industry are not good at innovation. In fact, I would say they're among the worst at innovation. But what they are good at is responding to innovation, because they're big companies. They have deep pockets. They can respond. So, you look at an automated submission. If you look at property quotes from 6 years ago, 5 years ago, they're terrible. Pages and pages of stuff that you had to enter, all of which could be answered with the Hazard Hub API. So now you type in an address, you verify some information, and you can get a quote in a minute versus what used to take you a half an hour or more if you knew the answer to the questions. So they're good at responding to innovation. So I just sort of see myself as, or we see ourselves as, well, we'll be the innovator, and then hopefully you follow along.
Yeah, I think that external innovation thing's very true, because it's a fast follower market. They're very good at going, that works, right? Great, we're going to jump on that. But it's the person coming from external that's going to, this works. Let's talk about the insurance implication of what you've been doing. Obviously, it's an area you know really well. You won the pitch event at InsurTech Hartford. I saw that as well. From an insurance perspective, without me kind of making some clumsy parallels, where's the insurance application in the most direct way? I know some of the things that tool can do around that, but it'd be really good to kind of talk to the insurance side of our audience and say, okay, like what's the application here?
Sure. There's a couple of things that we want. We have a couple of inspection companies signed up who will allow us to show previous inspections on a property as part of the report. But what we really want is insurance claim data. Was there a claim at this location? And claim data is locked up very, very tight. It is the princess at the top of the tower, and no one's been able to sort of scale that tower to democratize that data to people who would be most impacted by it. So our approach to the insurance industry is we want claim data for two reasons. The first is the time that a problem is most likely to be corrected, A, right after the event, but B, when the house changes hands. So you can tell the inspector, check for this, it was damaged, was it repaired properly? So the claim doesn't become repetitive, especially with things like water leaks, because water leaks can become repetitive. And the second is that someday you're going to insure this house. And would you rather insure a house where you knew that the new owner knew about the prior claims, or one where they didn't? And so we think that those people will have a lower loss ratio because they're more conscientious. But then the third, I said there were two. I feel like it's the Spanish Inquisition. The third is that eventually we will have enough data to do models, an insurability model for the property. And we'll build those in conjunction with some actuaries to say, here's the insurability score for this house. So the consumer knows going in, this is tough. Like if you're in Pacific Palisades, California, and next to a ridge line, you're going to have trouble getting insurance for that property. Or if you've got a bad roof, it's going to cost you more than if you have a good roof. And so that would be a score that we would then sell to the insurance agents and the insurance agencies. to say, here's the insurability factor of the house. And then also, here's some things that you can do to lower that or raise that insurability score to make it safer. Put in a water sprinkler system, put in gutter guards, put in little things that don't necessarily cost a lot, but can make a big difference in your insurability. So, and again, it's not our primary focus.
No,
our primary
no.
focus is on the real estate transaction. But when I think about how much good this could do for the overall industry, it gets me really pumped, because you have the ability to expose. You ever try to get a clue report for a house? It's like going into Fort Knox, for crying out loud. Both of those are American references, so sorry about that. But it's like getting into 10 Buckingham Palace. It's like it's ridiculous how hard it is to get a clue report. And so what we want to do is to make that data more visible. And we don't have to have the amount. We don't even have to have the insurance company. Just the fact that a claim happened, and here is the category, is more than enough to start the engine to say, hey, you got to make sure that you ask questions about this, because this is a record on the property.
It's fascinating for me, though, because, I was reading this, obviously I'm Brit, and I bought, I'm actually selling my house at the moment. I've had several kind of versions of going through this, and the same problem applies. You have someone to come around and look at your property, and they come around, and lots of it's kind of so surface level. It's like, yes, you might get an expert and they'll go, oh, this is how old, this is the construction type. But a lot of it is like, oh, we can't get behind that wall, so we can't tell you. There's so much that can't tell you. We're guessing here. And I'm thinking, this can't be the best way. And also it's expensive, and also it's slow. And so it slows down the process. And the process to buy houses, it's very normal for it to take 6 months to buy a house. And this is just one of those factors that doesn't make sense to me. Bringing it back to the insurance part of the equation, I noticed on, one of the things is kind of looking at potential insurance quotation. And I was just going to ask you this, how much is changing insurance rates have impacted the importance of looking at potential insurance cost of a house people are buying? Are people much more proactively looking at that? In the UK, it would be a little bit, I wouldn't say negligible, but within reason. I think it's a small land mass. Yes, there are harder parts to insure than others, but largely speaking, it's not something that you probably factor in when buying a house. But in the US, it's such a dynamic landscape, particularly property insurance. Has that impacted how interested people are in it?
Oh, yeah. California added an insurance availability get out. I forget if you can't get insurance for a house, then you have the right to opt out of that real estate transaction.
Wow.
So, and you can always get insurance for a house. It just matters how much you pay. That's a real thing. If you're in Florida, one of the wettest states in the nation, you don't have to disclose as a seller whether your property's been flooded. Like, how can that be the case? That's just wrong. And so one of the things we do is we have a catastrophe database of about 500,000 properties, and we say that these properties have been damaged somehow before, whether it's flood, hail, wind, tornado, wildfire, or Minnesota with civil disturbances. We tell you that's what happened at that property to kick off a series of questions to say, hey, has this property ever flooded before? Because the realtor has to answer as honestly as they can. Yeah, it's a huge impact. I wouldn't say that there always seems to be someone willing to gobble up your house, especially because we have a bit of a structure shortage here in the US. But it's a question of whether you want to stay in that house or whether you want to move somewhere else. So we see people moving all the time because the cost of housing gets so expensive, and insurance is certainly a factor in that cost of housing.
And then this is for the UK versus US listenership, because it's about 50-50 on our podcast. These costs sit with the seller, don't they? Most of the times in the US market, so the seller bears the costs of a lot of these. So whereas the buyer,
they don't want
in the UK.
It depends on the state. Different states have different requirements, but most everything is paid for by the seller in the US, including if you get an inspection. The inspector is generally paid for by the seller, or it comes out of the escrow of the sales agreement. And there are inspectors who want to protect you as the buyer, but there are a lot more inspectors they get the business because they help to get the business done. So they might not tell you some of the other things that they see because it would interfere with the deal. And there have been many, many times where I've talked to realtors and they said, don't tell them that, just tell them enough so that it fulfills the requirement. Don't let them know what you really think about it. And that's a shame. That's got to stop.
It's definitely the case in the UK. You touched on it briefly from several angles. I got bored of saying the word embedded, but there's clearly quite an obvious embedded insurance play within this, right? Is it something
Yep.
you've looked at because you know the space so well?
Well, I think the thing that we don't want to do is we don't want to choose an answer. We want to choose the possibilities of answers. So right now you can click on a button that says, we'll tell you what the estimated insurance amount is or insurance premium is for the property. And you can click on a button and get quotes. And we'll pass all that data back through the lead gen process with all of the parameters that we have from the report, so you don't have to fill everything out all over again, and then let an MGA take care of that. So we become the lead gen source for the MGA. So I think that now, does it open up the possibility that at some point we could have an MGA? Sure. Do I want to do that? Not today. You can. One of the dangers as an entrepreneur is you can chase too many shiny things and lose your focus. And our focus right now is on making the report the key, and then we can look at other services down the line.
I think that's the thing that's echoed from our first conversation. Successful exit of Hazard Hub, talking about this business. The thing that strikes me that you seem to kind of resonate all the time is like simplicity. You sort of like, this is the problem we're trying to solve. And yes, it has opportunities over here. Yes, it has opportunities over there. But do you think that's why you've been able to successfully go out, two businesses exit, and then
I do think that's one of the more, I think that's one of the more interesting compliments that I've gotten from somebody, is that you resonate simplicity. Wow. You Brits and your humor, you're funny.
I mean that as a compliment, Bob.
I mean, I watched Benny Hill when I was a kid. And I mean, maybe that has an impact. You have to, clarity of vision helps to make your decisions much easier. When your values and your reasons for being are clear, the decisions are much, much easier. That's true in life. It's really true in business. Because even in Hazard Hub, we avoided anyone who didn't, just take a step back. As an entrepreneur, your job isn't to serve everybody. You can't. Your job is to find people who want to do things the way that you want to do them and work with those people until the other folks sort of get an idea of how they can work with you. So anytime there was someone who was like, well, you have to do this and you have to do that and you have to do this, it's like, all right, we have to leave. And it wasn't a bad thing. It was just, we're looking for the people who want to do things our way. We know what we want to do. We know what we want to accomplish. The market will tell us whether we're right or wrong. And sometimes people get a little bit desperate to be right. You got to be tough. You got to understand that, it's going to get dark before it gets light. Just keep grinding. The winners and losers don't come down to the smartest people in the world. It's the ones who grind it out. The grinders win. If you happen to be brilliant, that's great. But if you keep grinding and keep working and keep making incremental improvements, chances are you'll win if there's a market for what you want. Focus is the key part to our success. And my co-founder, John, who's with me again from Hazard Hub, it's focus, 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 focus. Eyes on the prize.
I say that, and you masterfully made me look like I was being rude then. But I said that as a big compliment because where I see it go wrong, particularly in software businesses, and I've seen businesses go, and they've got quite a clear idea. Look, of course, you've got to take feedback on board, and of course, it shapes the product. People almost become consulting businesses because they go, "Oh, we could do that, and then we'll go and do that, and we'll do it." And then you end up building a business all these different customers want, rather than having this clear customer, clear product, clear solution. And then going back to your kind of earlier thing, like the successful part is having this, building it with an exit in mind, if that's what you want to do. And the more people I talk to who sit in your seat, and even in my own journey, you go, how important these things are, and that clarity around the solution.
The interesting thing is people love good ideas, and people love to bet on the little guy. At least in the US, I'm not sure about the UK. Although we had great success with the London market with Hazard Hub. But I watch a lot of pitches. I get to the end of them, I'm like, what do you guys do? And how do I work with you? And how does it help me? Those are what's the problem? Is the problem big enough to worth solving? And that's a big one. People have wonderful ideas about little niches that just can't grow. The second is, well, how is this different from what's out there now? And the third is, why should I do this with you? And if you don't answer those three questions in your pitches, you're going to lose. I'm going to crush you if you do that against me in a pitch, because you gotta make people, but people love new ideas. New ideas are the currency of the US. People think it's cash. It's not. If you have a good idea, cash will find you. If you have cash and no idea of what to do with it, you're going to blow. So got to have a clear vision of why this means something to enough people that it's worth starting a business over.
I can't think of any better way to end the podcast, especially when speaking to three-time entrepreneur Bob Frady.
I do have a story that Alex reminded me of. The last time I saw you, I was in person. It was at ITC 3 years ago, and I was about to go alligator hunting.
Yeah,
and with a friend of mine, and this is I think this is probably the most exotic thing an American can do to describe to a Brit. They're like, you're gonna go after what? This prehistoric creature? And I told him, I said, I'm gonna kill an alligator, and I'm gonna make a pair of alligator pants out of it and wear it to ITC when they're done. And
I did not believe him.
I lost the argument. I lost the argument with my wife, but the alligator turned into this lovely purse. So alligator skin purse.
It looks
it myself.
It looks phenomenal, by the way. It's a hell of a purse.
It is. Listen, killing an animal is certainly a humbling experience. I don't mean any disrespect to people who don't like that kind of thing, or I'm not trying to be like, yeah. It was a humbling moment. And we gave away a lot of the meat. We ate a part of it. We repurposed the skin. It wasn't just for the thrill of the hunt, but to have a cool story that goes with it is kind of fun.
It is funny.
Yeah,
and as I was saying to Bob, it's like this was the first trip to ITC with my team, so I had two of my colleagues with me, and they were like, "Are all people that work in insurtech like that?" And I was like, no. But entrepreneurs probably a little bit more like that than others. So thank you for bringing a bit of colour and fun to the podcast as normal. And Bob, thank you so much for your time. You've been really generous. So really good to see you again, my friend.
Good to see you too, Alex. Are you going to ITC this year?
Yeah, 100%. I will be there with a new team member. I'm sharing the trips this year, so we're bringing someone else along. So it's their first time, so they're going to be a rabbit in the headlights, I think.
I will see you there.
All right. Thanks, Bob. Take care. All the best.
Yeah.
Bye.